This week at the zoo, the S&P 500 posted a 2% gain on rumors of a new round of economic stimulus. Hello and welcome back to the Wall Street Petting Zoo. I'm Christopher Smith.
And I'm Robert Coburn. And this week, we're going to start the episode a little differently because there's some juicy stock market gossip to cover this week. So we're going to start the episode with a couple truly bananas stock market stories that unfolded since our last episode. Stories about Wirecard and Hertz.
Yeah, so I'll kick us off with the collapse of Wirecard. Wirecard is a German electronics payment company. And for years now, activist short sellers have been presenting evidence that Wirecard is engaged in money laundering and accounting fraud. Activist short sellers, by the way, are people who bet against a company, bet that the stock price is going to go down, and then they release information that reveals some kind of wrongdoing on the part of the company, and they profit from the market's reaction to all of the evidence that they have presented. So anyway, but instead of investigating Wirecard on all of this news from activist short sellers, the German press and German regulators investigated the short sellers themselves instead, accusing them of manipulating the market by making all of this up. Wirecard also had private investigators, and I put that in scare quotes, doing surveillance of the short sellers, following them around, going to their house, taking pictures of them, and showing up to bully them at their homes and intimidate them. And plus, these short sellers got smeared by fake news stories, fake whistleblowers saying, I was an employee of so and so, and here's all the terrible things they were up to, when in fact, the short seller had no employees at all. And they got targeted by a constant barrage of phishing attacks, trying to steal their identities over periods of several years and get into their accounts. So it's basically nothing short of a terror campaign against the short sellers. But this week, the short sellers finally got vindicated after an auditor found that Wirecard has about 2 billion euros less cash than it has claimed to have. So it looks like Wirecard faked a lot of its revenue to the tune of about the last 7 years of its net profit. So basically, it erased this accounting discovery, erased about 7 years of profit for Wirecard. Wirecard is heavily involved in both the online porn and online gambling industries. So I really wouldn't be surprised if there were like mafia connections here. Financial Twitter has been talking about this being like our generation's Enron. I think this could be a bigger story than Enron because Enron was not terrorizing short sellers. So they've been up to some really bad stuff, and it's the stuff of a blockbuster movie for sure. And you might not think it given the hell that the short sellers went through, but all of this kind of made me want to get into activist short selling as a career. I got kind of excited about it this week.
Yeah, you and your short selling. All right, so I'll let you have that career all to yourself, Chris. So our other crazy story is about the rental car company Hertz, which of course declared bankruptcy recently. Now, when a company declares bankruptcy, there's a hierarchy of which creditors get paid first. And shareholders, they're at the very bottom of that hierarchy. So you almost always lose your money so if you own common shares in a company that goes bankrupt. But because markets are not rational and efficient like they're sometimes made out to be, Hertz shares soared on the news of its bankruptcy. It was one of the most popular holdings on the Robinhood app for a while. So Hertz creditors went to the bankruptcy court and said, hey, we want to harvest some of these dumb investor money by issuing millions of new worthless shares of common stock. The court agreed, and Hertz announced a share offering with a prospectus that literally said that if you buy these shares, you will almost certainly lose all your money. But later in the week, the SEC said, no, this is predatory. You can't do that. Anyway, this is what happens when you unleash a bunch of newly unemployed commission-free traders who have no idea what they're doing, and the pros see an opportunity to take advantage of them.
Yeah, it was a wild week, man. So, okay, it seems like there's a lot of predatory stuff happening out there, but let's get to the week's news. Enough gossip for one episode. The S&P 500 opened lower Monday on news of rising coronavirus cases. One example, the city of Beijing in China is reportedly in wartime lockdown mode in order to try to contain the spread of the virus there. Also on Monday, Bloomberg News revealed that corporate default rates have risen to their highest levels since 2009, although we haven't actually surpassed the 2009 levels yet. And an analysis by the Wall Street Journal showed that nearly 20% of US companies are now, quote, zombie firms that pay more money to service their debt. They pay more in interest on their debt than they make in profits. So basically, at the current rate, they will never be able to get out from underneath all of their debt. Despite all of this bad news, stocks got a big afternoon rally after the Federal Reserve signaled that trillions of dollars more economic stimulus will be required this year. And also, investment bank Morgan Stanley doubled down on its call for a V shaped economic recovery around the globe.
And Tuesday, we moved about another 2% higher, despite data from Bloomberg showing a spike in corporate bankruptcy filings this week. Most of the bankruptcy filings were in the retail sector. Longtime listeners of the podcast will remember that we warned a few weeks ago that a second wave of retail bankruptcies was coming. Well, here it is. Also in the bad news column on Tuesday, Fed Chair Jerome Powell warned that significant uncertainty remains ahead in the U.S. economic recovery, and manufacturing data for May came in 1.4% below expectations. In the neutral news column, President Donald Trump signaled that he's going to propose a $1 trillion infrastructure stimulus package. It's good news in the sense that he's doing this earlier than expected, but it's bad news in the sense that the package was originally supposed to be $2 trillion. But he thinks he can only pass a $1 trillion bill. In the good news column, what apparently drove the market's 2% gain on Tuesday was a combination of extremely strong retail sales data and extremely strong home builder confidence data, both of which came in well above expectations.
Yeah, I made some quick money Tuesday morning after I saw the retail sales data and the home builder confidence data were both like way above expectations. I bought some call options on Home Depot and Lowe's, and those both made me a lot of money over the next sort of 48 hours or so. But anyway, Wednesday we actually got a bit of bad news on the home building front. As both housing starts and building permits data came in a little bit lower than expected. So after I saw that, I sold my calls. However, home loan applications hit an 11-year high, perhaps due to low mortgage rates and also city dwellers fleeing to the suburbs. So housing start and building permit numbers may improve over the next couple weeks as home builders respond to the surge in demand from all of these new home loan applicants. Although I should also note that credit has been sort of degrading. So just because there were a lot of loan applications doesn't mean that those people are necessarily going to get approved for loan. So the market moved down slightly on all of the news on Wednesday.
Yeah, I'm hoping for the housing market to crash just because I want to buy a house.
Yeah, we've been looking at it too. So it would be probably good for us too.
Yeah. Thursday, the S&P 500 closed about even for the day without a big move up or down. Both new jobless claims and continuing jobless claims came in significantly above expectations, with only slight improvement over last week's numbers. This suggests we may have hit an inflection point where the low-hanging fruit is behind us and the jobs recovery is slowing down. Walmart is testing a store with only self-checkout, which goes to show how a lot of companies are responding to the pandemic by automating jobs. However, there was some good news for some parts of the manufacturing sector. Both the New York and the Philadelphia manufacturing indexes came in way above expectations this week, even though the national industrial production numbers were low. That suggests that manufacturing may be recovering in the north, where COVID-19 cases are still falling, but the recovery may be lagging in the south, where COVID-19 cases counts are getting worse. We also got some leading economic indicators data on Thursday that look pretty good.
Yeah, but the stimulus news on Thursday was more mixed. So, House Democrats unveiled a $1.5 trillion infrastructure stimulus plan, which, again, you would think would be good news, but it may actually be bad news for stimulus hopes because it means there are now rival infrastructure stimulus bills in Congress, which could result in a deadlock for some time. Also, the International Energy Agency unveiled a $3 trillion clean energy plan, but it would need individual governments to sign on to the plan. So it's not like the funding for this plan is already secured. It's just sort of a pipe dream. So I think we got a bit of a morning rally when those headlines hit on infrastructure, stimulus plans, and so forth. But I think that the market got a little bit less enthusiastic about it late in the day as I looked at the details of those things.
Yeah, and finally, Friday, the market pulled back a little as the World Health Organization warned that the pandemic is accelerating, and cruise lines voluntarily agreed to extend the suspension of operations for an extra month until September 15th. Also, data released by the Fed revealed that the Fed reduced its balance sheet this week by about $80 billion, the first reduction since the start of the pandemic. Since this rally has been heavily driven by liquidity from the Fed, it might be a bearish sign for markets if Fed liquidity is slowing down. There was a little tension between Trump and China earlier in the week after Trump signed a bill to sanction China for putting Uyghur Muslims, sorry for butchering that, in concentration camps. And China warned of possible retaliation. But the situation seemed to get resolved on Friday as China promised to renew purchases of U.S. agricultural goods.
So to kind of let's kind of bring that all together because that was a lot. I think moving forward, I am looking for probably the market to pull back a bit. I think that we're seeing because of the new rise in coronavirus cases, we're seeing extensions of lockdowns. We're seeing cities suspend reopening. In some cases, we're seeing businesses actually reclose, cities actually reclose. So I think that combined with possible slowdown in Fed liquidity is probably going to be bearish for markets for the next couple weeks. So we've now made a lower high, which in technical terms, if you follow technical analysis in investing, if you make a lower high, that usually signals that the market is headed lower. So on both the technical and fundamental side, I think that we have reasons to move lower from here. So I would just say be careful right now because we may have made a medium term market top. Okay, let's talk stocks that we watched. What were you watching last week, Robert?
All right, so last week I was watching airline stocks, so like Delta, American Southwest, and all these airlines saw a small spike in the morning Tuesday that tapered off the rest of the week. So, like most stocks that saw that jump on that stimulus package news early in the week, they saw that bump as well. I was anticipating a small dip this week. However, that never happened, so I didn't buy into it. I was also watching video game stocks like Activision Blizzard, Zynga, and Take-Two Interactive, and all three ended the week higher than the beginning of the week. And with rumblings of a second wave of COVID-19 cases, these may be safe havens depending on how much shelter in place is enforced the second go around. What stocks were you watching this week, Chris?
Yeah, so last week I watched some pharma companies. I had AbbVie, which had gotten a lot of good news, so I was really quite bullish on AbbVie. And I also pointed out that Merck and Bristol Myers Squibb had dipped to support levels, and that they had pretty good fundamentals, and I liked the stocks. All three stocks gained this week, although Merck and Bristol Myers Squibb only gained a little bit. AbbVie was definitely the strongest performer, as I had expected, with nearly a 5% gain. Let's talk stocks that we're watching this week. Robert, what you watching?
So this week, I'm going to continue to watch airline and video game stocks, see if there's any buying opportunities there. I will also be watching Bitcoin. A lot of options traders have contracts set to expire on Friday, so I've pulled out pretty much all of my money from Bitcoin as it may fall down to as low as 7,000 in my estimates. So after it bottoms out, I will buy back in, but that bottom may not happen until probably the beginning of July.
I am sorry to interrupt. I am with the riots and the pandemic, people are moving out of cities and into the suburbs. So I'm watching some real estate firms that sort of specialize in suburbs. American Homes for Rent has been investing in residential development projects in the suburbs of Las Vegas. So I think that they may beat expectations this year. And also, Invitation Homes also looks well positioned to capitalize on this. They also sort of specialize in suburban residential development. I should say, though, that these companies are already pretty expensive at their current prices. So I haven't actually bought them. I'm not really sure if I want to buy them, but I do expect them to be strong performers for the near term and probably beat on earnings this year. I also am watching dry bulk shipping companies. This is one that I actually have purchased. Eagle Bulk Shipping is a company that I am playing right now. Booking fees for dry bulk ships shot up about 60% last week, but the stock prices lagged the booking rates. So if the rates stay high, then I think that the stocks will catch up with the booking rates. And finally, I am also closely watching the energy sector. There's talk of oil prices rising to $100 per barrel within within a year or two. I doubt that oil will actually get that high because we'll have some production come back online as oil prices rise. But production cuts and supply destruction may squeeze prices up. I do think that prices are going to be fairly strong probably for the rest of the year, which would be good for both oil companies and renewable energy companies. So I've got a mix of renewable energy stocks like Solar Edge and oil stocks. So I think probably energy will be a fairly strong sector for the rest of the year. All right, folks, if you enjoyed the podcast today, please give us a like, share, or comment on YouTube. You can also follow us on iTunes and Podbeans. We'd really appreciate if you would leave reviews on iTunes. That helps us get the word out about the podcast. Also, tweet about us, like us on Facebook. We've got a Twitter feed and a Facebook page where you can follow the podcast. And we don't do any advertising for the show, so we'd really appreciate if you would share it with your friends to help get the word out. We also have underneath the YouTube video a link to a referral for Webull. So if you use that link to open a Webull account and you put $100 in your Webull account, you'll get a couple free stocks. And we also will get a couple free stocks for referring you. And that helps us support the podcast. We obviously don't get paid to do what we do. And I put in about probably 8 hours a week compiling all of this news for you and putting together a script and everything for the podcast. So would really appreciate just a touch of compensation for that, whether that come in the form of helping get the word out or opening up that Webull account so that we get a little bit of compensation for our time. That would really help us out a lot. Thanks so much for listening, and we will see you back at the zoo next week.
See you.